Hey everybody, Boris Nasser BK Force. Welcome to the commodity section for October 2nd to October 6th of 2017 for Aussie dollar, dollar CAD, Kiwi dollar. Interesting week this week because we've seen a very pronounced weakness in dollar CAD, which is really the big story as we open up for trade next week. And I think definitely deserves probably the most print as we look at it. Aussie dollar, Kiwi dollar have just essentially been non-entities. We had the RBNZ this week. The RBNZ said nothing new. They basically said they'd like to see the currency a little bit lower, and they would like to see zero chance, essentially, of any rate hike in the intermediate future. Same thing, very likely going to be repeated by the RBA this week, which is going to be coming out Wednesday night to you guys, Tuesday night to us, or Wednesday to you guys, Tuesday night to us. So really not much on the plate as far as data set goes for both Australia and New Zealand. On the other hand, Canada definitely has some very key data. I'll address that in just 1 second. Let's take a look at the resistance levels. So we've moved down a little bit. Everybody's kind of moved down. The dollar rally did take a little bit of juice out of Aussie and Kiwi, but it really took a lot of juice out of dollar CAD. So Aussie now is 80.78. He was about 81.79, so the range moved down. Dollar CAD really popped up off that 120 range, and now breaking out 25 today, although we're ending up just below 25 as I close out trade here in New York on Friday afternoon. Really targeting 26, maybe even 27 as a potential move to the upside. I'll discuss why that's true in just a second. And then Kiwi holding relative strength in some ways. Supported 71 pretty strong. 72 is actually pretty well bid. But the resistance here is at 73.50 remains the key firm resistance for the time being. Looking at the calendar, as I said, nothing really on the COM dollar calendar except for, what do we have? Just Australia services PMI, and then we have the RB trade balance retail sales, and then we have the RBA. So it's really Aussie news front of the week, none of which I think is going to be materially market moving, with the RBA very much intended to keep the policy aggressively neutral, meaning that they really don't want to move each one way or the other. This will be an interesting look, though. Thursday will start a lot of the Canadian data, and that's going to be critical. Trade has been the one weak point that I think everybody overlooked when they've been looking at Canada. Canada right now is kind of suffering a perfect storm of bad news. The Bank of Canada governor came out this week and saying no, we're not going to raise rates anymore. So the market is no longer kind of pricing a more hawkish policy. Oil ran up above 50, but held, really hasn't rallied much beyond 50. And if oil starts to drop back below 50, that's going to be a little bit dollar negative. Data has been markedly worse, both on the GDP side and the CPI side. And we have the trade data coming up, and then we have the labor data coming up same day as US on Friday. But I think that's really the critical thing that people are overlooking. One of the greatest ironies of the Trump election has been that the greatest victim of the Trump presidency turns out to be our best friend and neighbor up north, because Trump has turned his fury against trade with Canada. He's made all these noises about barring trade with China, but of course he can't do anything because U.S. markets are completely 100% dependent on Chinese consumers at this point. But with Canada, he has imposed a whole bunch of sort of idiosyncratic tariffs against Bombardier, against wood, against various other industries. And while in specific, it's really not having much of an impact on the Canadian economy, I think the market is beginning to feel that in aggregate, this could have a major negative impact. Remember, Canada is something like 80% of all trade Canada does with the U.S. We are essentially its main market of production. So Thursday's trade balance is going to be very key, but all of it, I think, has really changed. Although we're long dollar, we're long dollar CAD because we're negative caddy. It has really changed the market perception from being bullish loony to now being very much bearish loony. Let's take a look at the charts here and see how everything sets up. So let's take a look at caddy, because this was really the big story of the week. And actually, probably worthwhile for us to take a look at the weekly for just to see the power of the weekly. Look at this. Second week in a row, we had a major big V-shaped rebound. Now, we are coming up. We took this 125 out. And it would be super bullish for dollar CAD if it held, but it's close enough to 25 that you could say it's still very bullish dollar CAD. it really doesn't see much of a resist point until around 27. So there's another 200 points of upside here before you meet any kind of a serious technical resistance. So this V-shaped bounce on the weeklies, pretty telling. And on the dailies, you can certainly see it, in slow but very firm motion. That's going to be the key thing. If Canadian data comes in weak, or conversely, if U.S. data comes in strong, I think Canada still remains the relative weakness trade as the week goes by in the commodity dollar land. Here's Kiwi on the weekly, looking relatively weak, but we're still holding. This is the critical thing. As long as Kiwi kind of holds above the 71.50 level, it's actually a mildly bullish formation. You have a higher low and a series of higher lows here. And to me, Kiwi still remains a relative strength trade on a very, very low volatility basis. So for it to get very negative, of course, we do have the risk, the political risk here, with the center-right party not yet inaugurated into running the government. We have the final vote tally coming up really until next week. We really won't know until the week is over. Still one more week of uncertainty in New Zealand. But if it does come in strongly towards Labour and Labour picks up a couple more seats, there is a very serious chance that the Kiwi could test these lows at around 71.50. That's the surprise scenario. If, on the other hand, it eventually settles down into a center-right coalition, I think Kiwi just generally looks to be a relative strength trade here. And for now, you sort of assume technically that unless and until it breaks this 71.50 level, it's a buy with a mild upside bias towards the 74 handle. And finally, Aussie, much weaker. And you can see the relative weakness of Aussie here. It's almost similar to CAD. If RBA wants to beat it up a little bit more, we have a reasonable chance here. And this is we have two data points. We have the trade balance, we have the retail sales, and RBA. If all those show material slowdown, I think the market gets much more negative Aussie, and it loses this 78-80 corridor, and we could start trading back down towards the 76-78 corridor, or 78-76 corridor to the downside. So watching that pretty carefully. Both Aussie, CAD are the relative weakness trade, and Kiwi is the relative strength trade as we open up the week in calm dollar land.